Hello, and welcome to this latest episode of the Friends of Sanctuary podcast. I'm Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth. Today, I am pleased to welcome our guest, my friend and colleague, Vince Fertitta, President of Sanctuary Wealth. Vince, welcome to the program.
Thank you. It's great to be here with you shooting this podcast. I'm excited.
I'm excited too. You just wrote a very interesting white paper, and it's titled A Guide to Independence, a comprehensive guide to independence for financial advisors seeking true ownership. Now, you and I spent many years at a firm called Merrill Lynch, and that's called a wirehouse. And we pretty much grew up in a wirehouse. In fact, I think you had family at Merrill or another wirehouse.
Yeah.
So you grew up all wirehouse.
I did. I grew up in the business. My dad was actually an E.F. Hutton stockbroker. Goes all the way back to the 60s. And I grew up in his office running order tickets to and from the wire operator. And then got into business myself 1 week out of college in 1992 in an old E.F. Hutton office. It was Smith Barney by the time I left there in 96 and joined Merrill. And was a financial advisor in total for 10 years before climbing up the leadership ranks.
The industry of wealth management is changing, and I think quite dramatically. What used to be primarily a wirehouse industry is really dynamically shifting and changing. Is this one of the reasons why you wrote your paper?
It is. I talk to wirehouse advisors every day. And I'm constantly explaining the evolution of our industry. And so I thought, why don't I just create a reference guide to make it simple for them to refer back to? But really what's happened is that the industry just evolved to meet a demand that was always there. When you think about it, all these great FAs at different firms. The really good financial advisors are almost by definition entrepreneurs. And that goes all the way back to when my dad was in the business in the 60s and 70s and 80s. It's just that at the time, there wasn't an option. Like you could be an entrepreneur, but you couldn't own your own business. And the reality is that an entrepreneur will never truly feel fulfilled in an employee environment. It doesn't matter how great their employer is or how great the company is they work for. They're creative, they're driven, they're motivated, and they would rather own their own business if it's an option.
So let's kind of compare and contrast where we were and where we are now and where we're going. So our audience kind of has an idea of what we're going to talk about in this podcast. I agree with you. All the financial advisors I've really worked with that have built a significant business, I've always seen them as entrepreneurs. They run their own business. They're just housed under another entity. Why don't you kind of go through the evolution and change? For the people in the audience that may not be aware, what is a wirehouse compared to what is, I guess now we're calling going independent?
Yeah, so the classic big wirehouses you think of are Merrill Lynch and Morgan Stanley and UBS and Wells Fargo. They're big corporations that have a broker-dealer and an RIA, heavy research, deep platforms, a lot of resources, all of which you pay for, right? So typically the payout structure is 40 to 50% of your revenue, and you're among thousands of other financial advisors. And in the independent space, when you do it right, you own your own company outright. It's your business. You've unlocked this asset. So when you're at a wirehouse, they own it. You're just providing cash flow and they're paying you a portion of it, but you don't have an asset that you can sell. And so what's happened over the years is that the industry has evolved primarily with technology, but we could go all the way back to when Glass-Steagall broke up and things started changing there, where you can own your own business and custody your assets with one of the large custodians like Schwab or Fidelity or Pershing. So it's a different business model, but it's the same relationship with clients. It's a matter of how you want to achieve that.
Now, our industry is heavily regulated, and the regulations are important, but sometimes and I worked in a wirehouse and you worked in a wirehouse, sometimes they have their own regulations
Yeah.
and guidelines. How do you see the industry today compared to where it has been in terms of that overhang, that regulatory overhang, and how an advisor can do their business?
Yeah. Well, so there's a big difference between regulation and policy. And so I think what you're referencing is policy. And the bigger the firm, the harder it is for them. Really, I don't blame any of the big wirehouses for the way they have to manage these advisors, because the regulators really expect them to manage to the lowest common denominator. If you put a policy in place, it can't only apply to your best advisors. It has to apply to all of your advisors. Some of those advisors are rookies. They've been in the business 6 months. Some of them have a bunch of dings on their U4, right? So they have to really tighten up their policies. And then a lot of the policies were created as a concession in some sort of settlement, whether it was, a private settlement or something regulatory. So you end up with tons of policies that aren't really regulation. When you leave there and you go independent, there are a couple of different ways to do it. If you wanted to establish your own RIA with your own ADV, there's no legacy issues. It's a brand new entity that you started, and so you can just follow the regulations. The challenge with that is for most of the wirehouse advisors, they've never had regulatory responsibility. They've had compliance, right, where they have to follow the rules, but they've never been responsible for interpreting a new SEC ruling, creating WSPs, executing a strategy to follow those correctly, and being held accountable if they get it wrong.
That can be a little overwhelming.
Yeah, that can be a little scary, right? So, but that's one way to do it, is to establish your own RIA. And really, that was kind of the only way to do it until maybe a decade ago. And that's one of the reasons why you didn't see so many wirehouse advisors going independent until more recently. Now there are places like Sanctuary and others who will take on the regulatory liability for you, which gives them the comfort to go out and establish their own business.
So I talk to a lot of advisors still, right, that are not necessarily at our firm, at other firms that I've met through the years. And some of the pushback that I get is, I've been doing this 40 years, 40 plus years. I don't want the hassle of moving everything, because it's a big job to move your book of business. My son or daughter is in the business, or my nieces and nephews are in the business. I'll let them decide. When you're talking to advisors, trying to explain what the world of independence can provide, what do you tell them?
I mean, listen, I acknowledge that it is work. What I will tell you is, I don't think it's really too much more work than if you went from Merrill to Morgan, like wirehouse. Any kind of move is work. Going independent, at least with us, is not a big lift from there. But look, you have to have some gumption left, right? If you're at the very end of your career and I'm going to retire in 2 years, I can show you that, well, you could retire with twice as much money if you did this, because there's some financial benefits to going independent. But sometimes the motivation's just not there. Inertia is a powerful thing. And that's why we don't try to convince someone who really doesn't have it in them to do this. It is for someone with some bold, courageous ambition to go independent.
So we do have a team, though. You're not alone in the transition. We have a whole process that takes weeks and maybe a couple of months that prepare, and then there's a team on site, right? So you're not left there by yourself. Is that correct?
Oh yeah. I mean, when you go independent with Sanctuary, we have moved, well, essentially 120 teams, right? Between Sanctuary and our new acquisition, which was True Independence. We have a very regimented curriculum. It's 12 weeks at a minimum, and all the I's are dotted, the T's are crossed, to make sure that you're not violating something you didn't realize you were violating, but that you're as prepared as you possibly can be. That transition team is led by Lily Kaufman, who also worked with us at Merrill Lynch for over 20 years. And she was really one of my first hires, was to get her to Sanctuary to help us build that out. And listen, every time you do one, you learn something, right? Something goes a little bit wrong and you have to adjust to it. So after doing so many, we're pretty hard to compete with when it comes to transitions.
What I can honestly say, I mean, for years I walked Merrill offices and meeting and greeting many of our advisors, many of our top advisors at the time at Merrill. But the first time I walked into a team that went independent at our firm, it was their firm. The look and feel is dynamically different. How they approach the business seems to be even more enthusiastic because they own it. They're responsible for it. Do you get that same sense when you meet some of the advisors that have transitioned over?
Absolutely. And I mean, particularly on day one. You know, they have all of this adrenaline going, right? But there's also this pride of ownership that is just crazy, right? They've never owned anything. Think about their clients are business owners. And so they've related with them. They've seen the celebration and the success, but they've never truly had it. And now they've unlocked this asset. This asset is their life's work. You know, they have their own name, their own brand, their own logo, their own real estate. They decorate it the way they want. They message things the way they want to. They don't have all the constraints of being an employee, and it feels great.
So there's different options if there is an advisor out there that wants to move from a wirehouse or move from one independent platform to a different independent platform, because you can do that. What are the various different options that are out there today? And I think you go through that in the guide.
I do, right. I would encourage people to read the guide, but I'll kind of take you through it. And just know, like, when we created Sanctuary, we created it with a lens into the wirehouse advisors, right? So having come from Merrill, and you know, obviously we have deep roots at Merrill Lynch. We know those advisors. We know what they like about their previous firm or their current firm. We know what they don't like. We know what they're looking for. We know what they're excited about. So we created Sanctuary in the model that we thought was most attractive to them, but it's not the only model, right? So as I was talking about earlier, there's kind of the do-it-yourself model, which was sort of the only way you could do it before. That's where you establish your own RIA, which means you can only conduct advisory business through that entity. You're probably going to leave all your brokerage business behind. And then you're going to hire a chief compliance officer. You're going to need a bigger staff because you don't have the service center or back office of your current employer. You might need a marketing person. You've got HR. You've got to create a benefit plan. There's a lot of people that you end up hiring in the do-it-yourself environment. The good news is your payout is 100%, right? Whichever the custodian is just paying you the fee. But the bad news is you have a lot of cost and a lot of administrative work. And then now you've taken on the regulatory liability of what we were talking about earlier, where the SEC knocks on your door and says, hey, we put out a rule 24 months ago, and it doesn't look like you've implemented that rule. And that's your fault. There's no one to point at. You know, at your current firm, you can point at the compliance officer or whatever it may be, but you own that. So there's some drawbacks to that. There's also no real opportunity for scale. So you're a single buyer, right? Even if you're $1 billion RIA, when you're going to negotiate with a custodian or a technology vendor or whatever it may be, you're probably paying rack rate. So that's kind of that one. Now, what I will say is when you have your own RIA like that, you're in complete control, right? If you want to add a new fund, there's no one that you need to get approval.
You have a story of an advisor that you were trying to recruit that was thinking of doing that. And he gave a really good specific example. Can you walk us through that example?
He did. He gave a great example. And you know this advisor. I'll have to tell you about him later. Yeah, he called me and said, listen, I love everything you guys are doing at Sanctuary, and you're going to think I'm crazy, but I want to do this myself. And I said, why? And he said, listen, Vince, you're probably the kind that if you were going to build a house, you would have a real estate person help you find the right lot, and then you would get a referral into a few architects that you would interview, and you would ultimately hire one, and then you would hire a general contractor, and you would probably stay involved, but they would do everything. And he said, I'm not that way. He said, I would find the lot myself, I would be the architect myself, and I would be the general contractor. I would bring in all the different trades. I would figure out who to use to pour the slab and which plumber and all those things. And he said, and I know that at the end of the day, the house that I build will probably cost more money. It'll be more expensive, and it will likely not be the same quality as the one you would have built. But I just want to do it. And I said, I can't argue with that as long as you understand what you're getting into. So he did end up changing his mind, but that was the motivation. And it really helped me realize that there are people that want that level of control.
So what are other options for going independent?
So on the other end of the spectrum was kind of the IBD model. And that's been around for a long time too. That's when you're affiliated with an independent broker dealer. Technically, you're independent and you own the business, but you're really kind of beholden to that one financial institution. You're not allowed to really work on client assets outside of that institution. You have some of the same regulatory policy issues. Remember we talked about at the wirehouses, they have to create policy to the lowest common denominator. And the do-it-yourself, you are the lowest common denominator because you're the only one on the RIA. In these IBDs, there can be 20,000, 25,000 brokers of all walks of life and background, right? One might look like you, another may have been fired for churning, 3 weeks ago. So you can imagine the policy restrictions and then the way they have to restrict the platform so that you can't do some of those things you can do if you have your own RIA or if you're on a shared RIA like ours. There's some attraction to it because it feels a little bit more like the W-2 environment you're leaving. And so there could be some comfort to it. Also, they own the broker-dealer and they own the clearing firm, which means they can make money the same way that the big wirehouses can off of you and your clients, which affords them the ability to provide big upfront checks. So typically when people go independent, it's not for a big upfront check. They're unlocking this asset. They're betting on themselves and their ability to better serve their clients and to grow this new asset. In the captive model or the IBD model, or even in a corporate IRA that only works with one custodian, you really lose a lot of that. You're kind of tied to how this company, what they'll let you do. And it doesn't feel very different than a wirehouse.
And then there is multi-custodian, and there's what's called aggregators.
Right. So multi-custodian just means that you're not limited in which custodian you can work with, right? So like at Sanctuary, we have custodial agreements with 3 or 4 custodians, the biggest custodians out there that you would think of. But we'll also, because we're multi-custodian and we're not beholden to one financial institution, we're fine if you don't want to use any of those. If you had, assets at Fidelity, but you also have assets at JP Morgan where we don't have a custodial relationship, I can still advise you on those assets and I can still bill you for that advice. We're indifferent with which financial institution they work with. And to me, that's a core component of being independent. You don't get that in the captive IBD or single custody environment. So at Sanctuary, we are a multi-custody hybrid boutique. Okay, so I'll take them one at a time. Multi-custody I already talked about. They can do business wherever they want and wherever their client sees fit. They can advise on assets, whether they have a integrated log on where they can log on and manage the portfolios, or assets just held at some other financial institution around the globe, and they can manage those assets and advise on those assets and bill for that advice. Hybrid means that we own a broker-dealer in addition to the RIA. So the broker-dealer means that while most of our partner firms are at least 80% advisory, they have access to the capital markets through an integrated broker-dealer. And by the way, ours is over 100 years old. It's got great bones and relationships with all the other counterparties that you need to have a relationship with. And the integrated part of that's really important because if we didn't have an integrated broker-dealer, our partner firms would have to go rent a broker-dealer, meaning they were going outside of Sanctuary, outside of their compliance bubble if they had their own RIA, and renting a broker-dealer that serves advisors of all walks of life and doesn't know them, which is a pretty bad experience. And then a boutique is just we're small. We have 120 clients, as you know. We have 180 employees to serve 120 clients. We're exclusive. We don't invite just anyone in. And those who are in have built this great culture and community where even though they all own their own business, they have their own name, their own brand, their own logo, their own website, they feel like they're part of this elite network, and they really, help each other. They collaborate, they inspire each other, they push us to be better. And so that's the Sanctuary platform.
We had exciting news. We bought a company called True Independence, located in Portland, Oregon. How does that complement Sanctuary? What kind of platform did True have, and how does that really expand our business model?
Yeah, so as I mentioned earlier, we at Sanctuary created it with a wirehouse mindset, right? We came from the wirehouse, we knew what they needed, what they wanted. One of the things that we felt strongly about, and still do, is that for most wirehouse advisors, they do not want the regulatory liability that comes along with establishing their own RIA. So with Sanctuary, they can offload that to us. And as long as we maintain a high lowest common denominator by being exclusive, then they won't really have the negative aspects of being affiliated with a corporate RIA. However, there is some demand out there, even within wirehouses, to say, no, I want the control that goes with having my own ADV. So the way I think about that is, if you were an advisor on the Sanctuary, in the Sanctuary network, and you had a fund or a piece of technology and you wanted to start using that, you would need Sanctuary to conduct due diligence on it and to agree to add it to our platform. And we might not. We might do the due diligence and come back to you and say, hey, we don't like this, and this about that technology or about that asset manager, and therefore we're not going to put it on the platform. If your reaction to that is, oh gosh, thank you, I would have never discovered that, I'm so glad you all conducted that due diligence, then the shared ADV is probably something that you would value. If your response was, hey, listen, I don't care what you say, I really want to use this anyway, then you want more control. And you might want to have your own RIA where you get to make those decisions. So the True Independent model is one to support those partner firms who want to have their own RIA. What's really unique about True Independence, and one of the reasons we were so attracted to them, is that I said earlier that when you are independent and you have your own RIA, you absorb all of the regulatory liability. True is a little different. True is unique in saying, we'll be your partner in that regulatory liability. You own the regulated entity, but we will be named as the chief compliance officer on your ADV, which is really unique. And that means that they're in there with you, working with the regulators. And so it's a very different relationship than you normally find.
Vince, there's another model out there. I think it's called an aggregator. Can you explain to us what an aggregator is?
Yeah, an aggregator is a company that will essentially buy your independent firm or maybe a portion of it, and they'll buy it at a lower multiple. They'll aggregate it with a lot of other ones to get to a higher, bigger company, and then they'll sell it at a much higher multiple. And so there's some advantages. There's some times when you might be interested in that. If you're at the end of your career, that's when you want to sell it. There are some things to be a little careful about. Sometimes with the aggregators, the ones who will pay you the highest multiple, they're doing that based off of anticipated synergies, right? Meaning, we're going to buy your business at this crazy high multiple, but you're going to need to stay on for a few years and convert that business into our products and solutions, which will create additional profitability for us. You may or may not be okay with that. It depends on who the company is, et cetera. The other thing is, with a minority investment, you really, with either one of these, this is your life's work, and you're taking on a partner. And the aggregator, if they're buying your whole business, you've sold out, you're back to being a W-2 employee of the aggregator, and you do whatever they tell you to do. And it's more controlling than it was at the wirehouse, because at the wirehouse, you never owned something and sold it to the wirehouse. Here, there was a monetary transaction. They gave you money, they own you and your business, and you'll do what they say. Then on the minority investments, which is interesting, a minority investment can make a lot of sense, and we'll even do these when it's appropriate. If one of our partner firms really would like to have some capital, some dry powder to go make their own acquisitions, and they want to sell us 20% of their business in order to do it, great, we're happy to do that. Maybe they just want to take chips off the table. Maybe they're not ready to sell their company yet, but they want to start selling 20% per year for the next 4, 5, 10 years, whatever it may be. That can make sense too. The challenge with that is, remember, you have become independent. You are in complete control. And as soon as you start selling part of it, you start losing independence. And so you have to be very careful, and then you have to be really selective. This is more than a marriage, right? You have sold them part of something, and they are now in your business forever. So with us, we kind of discourage those who are, a breakaway out of a wirehouse from selling us 20% of their business today. Like, yeah, we all love each other right now, but why don't we give it a year? And before we make that kind of commitment to each other, why don't we give it a year and make sure you still find the value in us, we still want to work together, and then we can create that environment. So an aggregator can be valuable, it can be good. There's just some things that you need to, be aware of as you approach that.
We call our advisors partner firms. Why do we call them partner firms?
Because we're their partner in running their business, right? Like they're our client. If you really want to get technical, they're our client, and we do think of them as clients, but we are doing things for them that their business requires, meaning we're doing their operations, their billing, their payroll, their compliance. We're providing an investment platform, a lending platform. We have a specialist network like they're used to. We have a chief investment strategist. We have, coaching. And so in all of that, we're their partner. I think you'll remember last year at Oasis, our national conference, we kind of related that to being the pit crew, right? Like they're driving the race car. Our job is to help them win, and we're surrounding them. And when they come into the pit stop, we're changing the tires and getting everything ready and getting them out there as quickly as possible. That's how we really view that relationship.
It sounds to me, Vince, that we're cutting edge, leading edge here at Sanctuary in building this new platform. And Sanctuary just celebrated 6 years. We're 6 years in business. Where is Sanctuary going? Where's the industry growing? Why is this such an exciting time in the business?
Well, you're right. It's hard to believe we celebrated 6 years. And I will tell you, it wasn't easy getting this thing off the ground in those first few years and building the platform that we have. And we are cutting edge. We are innovative. It's unique enough that now with the acquisition of True Independence, advisors can choose the standalone ADV model or the own ADV model. That's unique. You normally find that. It puts us in the position to be indifferent, to be a guide, to be able to talk to you about what's important to you and then help you get to the right structure, which is really unique. Before this, what you find is companies who use a shared ADV are saying that's best, and those who have an own ADV are saying that's best. The truth is, it's not for me to decide what's best. It's for you to decide as the advisor, and I can just guide you that direction. And so that's what I'm most excited about from the True Independence acquisition. But beyond that, we think that we can take the best of both platforms and actually create tailored and customized relationships with advisors that aren't choice A or choice B. It's more designed for you, and we're already starting to do that.
So at Sanctuary, we talk a lot about culture. Culture is really important to the firm. What does the culture mean to you?
Well, I mean, coming out of Merrill, as you know, Merrill had a great culture for a long time. And so I value culture, and I've seen the benefits of culture. And when we were building Sanctuary, I was a little worried about, prying people out of that culture because they thrive based off of their relationships with each other.
And we used to call it Mother Merrill.
Yeah.
Because the firm would take care of us.
Exactly. And we created an environment at Merrill where the advisors were competing against each other, but they were collaborating and sharing ideas, and they were inspired by each other. And my concern is that if you lift them out of that environment, without it, will they continue to thrive? And so we were very deliberate around creating this culture where even though they all own their own business, they're part of that same elite network, and they do drive each other, and they do collaborate, and they do inspire each other. And our entire platform was built one team at a time, right? When we're bringing them over, they have a need and we have to solve for it. Or once they're here, there's some opportunity that we need to solve for. And so the platform was built one advisor or one team at a time, and they all benefit from it.
So when we look at the business model of what an advisor can do in terms of a wirehouse, let's say a Merrill, Morgan Stanley, UBS, and what you can do independent, what are some of the things? Because, right, we talked about regulation versus policy.
Right.
What are some of the things you can do if you go independent, particularly maybe at Sanctuary, that you may not be able to do in a larger organization?
Well, let's start with marketing, right? When you think about the advisors in the wirehouses, they really can't market. They may think they're marketing, but once they see the world out there, it's very different. So market commentary. Their clients want to know what they think of the markets, and they really can't tell them. They can tell them what their firm thinks of the markets. They could maybe tell them what they think verbally, but they can't put it in writing. So once you're independent, you could have a volatile day in the markets, and you could be on a video at 4 p.m. telling the world, your clients, what you saw in the markets today, how you're reacting to it, and what you're looking for tomorrow. That is amazing, and it makes you referable. Think about that. Whether it's written or video, you send that to your client, and then your client sends it to their friend that says, here's what my person thinks about this. That's pretty astonishing. We've also had partner firms create educational videos. Like, in their own words, let me explain a mega backdoor Roth conversion. You put that in a video. Again, I'm going to send it to my clients. My clients are going to send it to their friends. I'm going to post it on LinkedIn. It's on my website. So there's a lot of things like that you can do. We have partner firms who've written books. We have partner firms doing local TV and radio ads. We even have one with billboards.
Some are on television.
Some are on television. We have them on CNBC and Bloomberg and Fox Business, and we help them get those gigs, and then they do a fantastic job. So marketing is a big one. And then from a client solution standpoint, think about all the things you can't do when you're at the wirehouse. Client wants to talk to you about their 401k. Maybe that's 50% of their liquid net worth. You're not allowed to really talk to them about it. Our advisors can advise them.
You can't get a fee on that either.
No, you can't get a fee on it, and you can't talk to them about it, and you can't give them guidance. When you're independent, you can give them advice and you can give them guidance. Now we've added a technology that will allow you to actually log into their 401k, obviously with their permission, and manage the portfolio.
And get paid for it.
And get paid for it, of course. So there's a lot of revenue levers, hard dollar planning fees. A lot of times the client and the advisor would like to engage in that kind of relationship. Maybe it's a client and a prospect. Maybe it's exit planning. Maybe it's advanced planning. You don't really have a portfolio. Why do you have to charge the client a percentage fee on their portfolio for doing a plan that it's not a perfect correlation? So you're free to do that the way you want. There's no account minimums. There's no minimum fee structures. This is your business. Another one, as I talked about, was advising on assets held away. Let's say I'm an advisor, I have a client that has $10 million that I manage, but they have another $10 million scattered around 4 different institutions. They see me as their financial quarterback. They'd really like to talk to me about those other assets, but for whatever reason, they're not going to move those assets to me. In the wirehouse world, I'm pressuring them to move those assets. In the independent world, I don't care, leave them there. I can still advise you. I can still aggregate all of that into everything that I do based off of technology. And yeah, you can pay me for that advice.
What are the trends do you see happening in the independent space?
I'm starting to see a lot of M&A, right? So they go independent, and they built their business organically, one client at a time. They're familiar with the sunset provisions like CTP at Merrill or FAP at Morgan or Alpha at UBS, and that's kind of the only way they can grow their business inorganically. When you're independent, remember, you're a business owner, you own an asset. And there are lots of other business owners. The demographics in the independent space are the same as in the wirehouses. The difference is when somebody wants to retire in the independent space, they sell their business. And so our partner firms are buying those businesses, and we've created a program to educate our partner firms, to train them, to create capacity for them. We even have capital available for them for these acquisitions. So we're seeing a lot of that right now.
What excites you the most about work?
Every day I get to enlighten someone. Whenever I talk to an advisor who's still there and they say, "Oh my gosh, I can't believe you can do that," that excites me. It excites me what we were talking about earlier about what can we do that's never been done before, right? We were a disruptor when Sanctuary started. We were a major disruptor, and we still are. And we kind of became the home for these elite performing wirehouse advisors. But now with the addition of True Independence and taking the two models and figuring out what can we build that's never been built before. And it's that kind of mindset, that's that kind of conversation that gets me excited. It's also sort of the DNA of our partner firms. That's how they all think too.
I see a lot of our partner firms on LinkedIn, very active on LinkedIn. We're in a digital world now. When people are searching and looking for things, they're online. They want to see digital content. When I look at the wirehouses, I really don't see advisors very active, let's say, on a LinkedIn. Do you think their business model is not necessarily adapting as fast as where the industry is today and going?
I do, and I think they can't do anything about that. Unfortunately, they have to manage to that lowest common denominator. So if I'm going to let you put out a video describing your background and energy, I have to be willing to do that with the rookie and the person with the compliance issues too. And so I just have to say no to everyone. And so that alone is a big issue. And you're right, it's a digital world. You do it with a restaurant, you do it with a doctor, whatever it is. First thing you do is you start Googling and figuring out what you can. And when you see a really generic website or whatever it may be, it's not encouraging. And there's other parts about that model that are really stale. It's just that over time, maybe you, certainly the advisors I talk to, they've kind of put their blinders on. And it's like, I don't even want to know what's out there that I'm not doing. But when we have people that are advising on private deals, clients looking at buying a building, well, you can't talk to them about that if you're at a wirehouse. With ours, you can. In fact, if you want, we'll conduct due diligence on that investment. And if we think it looks good too, we'll open that up to the other partner firms. So that benefits your client who's looking at putting together a class to buy the building. But think about our other partner firms. Maybe there's a building here in New York City that one of our New York advisors has sourced. Well, the client in Texas or in Florida or in California is going to have an opportunity to buy into that they never would before. So private deals, advising on assets held away, boutique alternative investments. All the big wirehouses have all the big name alternative investments, which is great. We have all of those too, but there's a lot of really good small boutique alts that their clients at the wirehouses never get access to, not through them at least. So there's a lot of those types of things that I just think creates a stale model at the wirehouses. They can't manage someone's 401k, they can't do private deals, they can't market the way that independents can market, they can't advise on assets held away. So they really are kind of in this battle with one arm tied behind their back.
So let's talk a little bit about True Independence. Tell me a little bit about their business, their culture, and how we see them integrating into Sanctuary.
Yeah, so True Independence, the profile of their partner firms is very similar to Sanctuary's. Otherwise, we would not have acquired it. I have harped on the lowest common denominator. We have a very exclusive and specific type of advisor that we want to invite in. And True Independence happens to have the same high quality partner firms. The difference really is that they have their own ADV. And so they have the final say and control of what happens within their RIA and who they work with. But because of that, and because you can't really scale that, there's 30 partner firms, each with their own RIA. It's hard to scale. And so it's hard for them to create a robust platform like we were able to create at Sanctuary. And so now what we're doing is we're kind of breaking the glass, right? It used to be if you have your own ADV, you can't have a robust platform. If you have a shared ADV, you can't have some of this control. We're shattering that glass. And so for the true partner firms now, we're starting to give them access to the investment platform, which includes our broker-dealer, our alternative investments, private deals, providing on assets held away. And what about, Marianne, one of your passions, right, with digital assets? And we're about to launch a whole digital asset platform, which will put our advisors at a level of access and research and information far beyond anything they could have ever had without a wirehouse.
That's true. And that's very, very exciting. Vince, let me ask you about our strategic partnership program. I'm sure there's a lot of advisors out there that come from a larger organization. They have access to all sorts of asset managers, private markets, they're thought leaders. And we have access to that too, but they may not think we have access. And that's through our strategic partnership program. Can you talk a little bit about that?
Yeah, absolutely. Normally, when advisors go independent from a wirehouse, they think of, I'll maybe maintain a relationship with a couple of wholesalers that I worked with, but I don't have any opportunity to meet anyone new and to organize any kind of programs around it. And really, we were that way for the first couple of years until we started building the scale to where now we have some significant assets on all of the major asset managers out there. And so we've created a program to organize that content and to sort of be matchmaker when we need to be between an advisor and a strategic partner, whether it's an asset, traditional asset manager, alternatives, whatever it may be, whether they're looking for content, they're looking for ideas, thought leadership. They're a big part of the added value and the resources that we provide to our partner firms.
I can confirm that because generally when we have a crisis in the markets, that's when everybody is looking for information. And particularly right now, because we've been in an unprecedented presidential election, we're able to go out to our strategic partner firms and get these thought leaders on a webinar within days sometimes. And it's really contributed, I think, greatly to the product offerings that we have for our partner firms.
Absolutely.
Vince, are there any other trends that you're seeing in the independent space?
Yes, and I'm asked all the time, like, where do I see the industry going forward? And the reality is that the big banks and wirehouses, those are always going to be. There's always going to be a home for those advisors. And so the way I see it playing out is that if your real interest and your real skill set is just that you're a great steward of those assets, then that may be a good place for you, right? Because the banks, they already have all the assets they could ever need. They don't need to reward an advisor the way they did me to bring in new assets, right? So they're gonna continue to sort of cut down the incentive for bringing in new assets. And really your job will be to take care of the assets that are already there. You'll be paid a good living, you'll have good benefits, and life's fine. But if you're an asset gatherer, if you're a builder, then I don't think you'll be very happy there. And you won't be rewarded financially for those assets that you're gathering. And I think those people will continue to move more and more toward independence where they're betting on themselves, right? If you're staying at one of the big banks, you're kind of betting on the bank to provide these assets. If you can provide your own assets, you bet on yourself and you get all the reward of creating this asset that could have a massive, generational monetary event down the road.
So this is obviously a very big disruption in what you and I actually grew up in. And it seems like the momentum is actually increasing. Can you walk through the growth of Sanctuary, right? In business for 6 years, what's been the growth path and where do you think we're heading?
So we're at $45 billion of assets with 120 partner firms, and we're across 31 states. We're going to continue to grow at probably 15 to 20 new partner firms per year, and $8 to $12 billion of assets, just doing what we're doing, without any other acquisitions or anything like that. But what I think will be different is we have our head down and we're working hard, and we're not going to look up until the 45 billion is 100 billion. But I don't think that we need to double the number of partner firms to double the amount of assets, for two reasons. One is the partner firms who are attracted to us and independents are becoming bigger and bigger. We just launched a $2 billion plus new partner firm a few weeks ago. We have more and more multi-billion dollar type teams coming to us to go independent. And so that's one reason we'll be able to double with fewer. The other is that we're starting to grow through our partner firms, right? Instead of adding another partner firm, somebody may come to me and they do $1.5 million of production. They meet our minimums just kind of barely, and they could have their own partner firm. But I might introduce them to one of our other partner firms who may be willing to integrate them into their current brand and logo. So there again, we grew, in that case, by $1.5 million of revenue, but we didn't add another partner firm. It's just like advisors with their clients. They want to grow their assets without growing the number of clients. We want to stay pretty small. We're at 120 now. I think we would be comfortable at 200 or 250, but we don't ever want to break that lowest common denominator that we have. And we want to be careful about the culture, and we want to be able to provide the kind of white glove support that we do today.
So you talk about white glove. Our CEO, Adam Malaman, when I hear him speak, every time he speaks in one of our meetings, he talks about excellence. We have to have excellence in service. What does excellence in service mean?
Well, we're a service, that's what we are. We're a service provider. So if that's your core business, you better be really good at it. And then when you think about our clientele, these are high net worth clients, right? These are high performing, successful advisors, and they are used to a high degree of service. That I always put my FA hat back on when I think about things like that. When I was an advisor, and all of our advisors today, their client is at the center of everything they do, right? And their whole team caters to that client. And they have structure and process and responsibilities that are all around delighting that client, not just satisfying that client, but creating a raving fan out of that client. And that's always been the mindset at Sanctuary. Adam absolutely gets that, as you've said. We very intentionally, when we built Sanctuary, put ourselves in a vulnerable position, which people thought we were crazy for doing. Because typically, if you went independent on a multi-custody platform, you didn't provide any transition dollars. In fact, they paid you to take them independent. Because we're multi-custody, somebody could fire us tomorrow and they wouldn't have to move their clients. The assets would stay on that custodian. We intentionally put ourselves in the vulnerable position of saying, no, we think that if we are accountable to our clients, if we have to earn their business every day, that we're going to perform at a much, much higher level. And that bet has really paid off.
We certainly are leaders in the industry, aren't we, Vince?
We are. We are.
I'm so happy to be here at the firm and working with the whole team. It's been a phenomenal experience for me. So I'm going to share something with you, and now I'm going to share it with the whole world, of what most people don't know. You want to know what people don't know? My dream job, my entire career, and I've had a wonderful career. I have no complaints. I have had a blessed career. But the job I always wanted was to be the chief investment strategist at the firm. At any firm. That was my dream job. And today I'm in my dream job. And this is my second career, not my first career. So how blessed am I that Sanctuary offered me this wonderful position. And for me, independence means that I can say what I truly mean, and I can talk on any topic and not worry about stepping on anybody's toes. So it's been just a phenomenal, wonderful second career for me to be working here at Sanctuary. And I specifically want to thank you because you were very involved in bringing me over to the firm. And I want to thank you for that. But before we wrap up, I have one more question for you. What didn't we talk about that you think our audience should know?
Well, I think you just covered some of it, which was the relationship that you have with the partner firms, with the advisors. You know, I know firsthand the reason we were recruiting you so hard is from our years at Merrill. I knew that you were the one the advisors wanted to talk to, right? You're the one who they wanted to follow. You're the one who they were trying to get to come in town and do client events. If they would ask me all the time, Vince, is there any way you can get Mary Ann to meet with my biggest client or my biggest prospect? And so that's what you do here at Sanctuary. And you only have 120 clients. And you don't have, they're all at a high level. And when I think about the audience that you used to speak to, that audience included rookies and people with U4 issues and some super sophisticated advisors, some not so much. You had scrutiny around you that says we can't say that because it conflicts with this, and no, we can't cover that. And so the freedom that you have, while I know it's wonderful for you and I'm thrilled and I can see how happy you are, it's such a benefit for the Sanctuary partner firms and their clients to have an unconstrained, completely accessible Mary Ann Bartels on their speed dial. We're the ones who are blessed, and they're the ones who are blessed. So thank you.
Well, thank you. And I'll share with you, we just had a team that moved over. They've been with us days, and they asked me to go on a webinar with their clients. And you can get that access that quickly. You're only days old, and I'll come on and I'll do a webinar with clients. But I just want to share, I have been blessed with many advisors seeking my counsel on markets for years. In fact, you always say I have a cult following.
You do.
But I'm going to tell you how I learned that. I'll share my secret. There is a secret to what I created, and that's Aunt B, my Aunt Bernadette, that went to Wall Street in 1956. And I loved macro research. I was an economics major, and I would go into her office, and I'd have this big macro picture, and I was so proud of myself. And she would say, Mary Ann, that's great. And she thought my analysis was very good and solid. But then she turned to me and she said, okay, now, Mary Ann, how do you make money for clients? And the first time she said that to me, I think I looked like deer in the headlights. What do you mean? She says, well, you have to take that information and dive it down on how you're going to express that in a portfolio. And that's the secret. We have to make money for our clients. And yes, there's risks involved. But what I've learned through the years is you have to give them information. No, we're not going to be right 100% of the time, but we give our logic behind our decision making so they can either agree or not agree and invest in what we're recommending. But that's the secret sauce that I've learned for anyone that wants a career on Wall Street. Not only do you have to have the story, but you have to know how to express it in a portfolio.
Well, and we took it to another level just this year, right? Because you could express it in a portfolio and the advisors can follow that. But we had so much demand because of your cult following that we needed to create portfolios specifically to follow your guidance. And as you know, I was first in line to get my own money in those portfolios along with Bob Walter, our co-president. I think he beat me by a couple of days. And the performance has been great. But it gives the advisors an opportunity to say, hey, if you really loved what Mary Ann said and you want to allocate part of your assets strictly to her, absolutely you can.
This is true. I do have a sector model that's up and running and has become a little popular. Well, Vince, this has just been an extraordinary conversation. And I hope that our listeners can really get educated about the world of independence. It has changed your life, it's changed my life, and it's changed all our partner firms' lives.
Absolutely. Well, thank you. It's been so much fun.
And thank all of you for tuning in.
Thank you for watching or listening to the Friends of Sanctuary podcast. Tune in next month to be sure not to miss out on the next installment of the series.
Securities offered through Sanctuary Securities, Inc., member FINRA SIPC. Advisory services offered through the SEC Registered Investment Advisors, Sanctuary Advisors LLC, and True Independence. Sanctuary Wealth consists of the wholly owned subsidiaries. Sanctuary Advisors LLC, Sanctuary Securities Inc., and True Independence, as well as Sanctuary Alternative Holdings, Sanctuary Asset Management, Sanctuary Insurance Solutions, Sanctuary Global, and Sanctuary Global Family Office.
All right, nailed it. Woo! That was awesome.